This problem states that from the following information prepare a comparative income statement of Sunny Limited. We have to prepare comparative income statement. We are given various items, that is sales, cost of goods sold, office and administrative expenses, selling and distribution expenses, other income, interest paid and tax rate relating to the year 2006 and 2007. This is the format for comparative income statement. We have to prepare comparative income statement for Sunny Limited, and we are given the figures for 2006 and 2007. So this is being prepared for the year ending 31st March 2006 and 2007. Among amount, first column is for the figures of 2006, second column is for the figures of 2007, then absolute change is to be taken, and last column is for percentage change. First item to be taken is sales. Sales are given of rupees 15 lakhs and 16 lakh 50,000 respectively. Sales 15 lakhs and 16 lakh 50,000 for 2006 and 7 respectively. Thus absolute change is 1 lakh 50,000 and percentage change comes to be 10%. That is 1 lakh 50,000. That is absolute change divided by base year figure, that is 15 lakhs, and multiplied by 100. We have to deduct cost of goods sold less cost of goods sold. Cost of goods sold is given in the problem. It is 12 lakhs and 12 lakh 60,000. For the year 2006 and 7 respectively. Thus there is change of 60,000. Increase is there, and that is of 60,000. And percentage change is 60,000 divided by base year figure, 12 lakhs into 100. It is just 5%. 5% percentage change is there. Now we can calculate gross profit. Gross profit. In the first year, that is 2006, it comes to be 3 lakhs, that is 15 lakhs minus 12 lakhs. In the second year, it is 3 lakh 90,000, that is 16 lakh 50,000 minus 12 lakh 60,000. The gross profit is being changed. It is increasing from 3 lakhs to 3 lakh 90,000. The increase comes to be 90,000 and percentage change is 30. That is 90,000 divided by 3 lakhs into 100. That is 30%. Now we have to deduct operating expenses. They are office and administrative expenses and selling and distribution expenses. Office and administrative expenses are 25,000 and 40,000 respectively for the year 2006 and 7, and the change comes to be 15,000, and the change is 15,000 divided by 25,000 into 100. It comes to be 60%. 60% increase is there. So far as selling and distribution expenses are concerned, there is no change at all. They are 50,000 for the year 2006 and 7. There is no change in selling and distribution expenses. Thus, total operating expenses comes to be 75,000 and 90,000 for the year 2006 and 7 respectively, and there is increase by 15,000. This increase comes to be 20% in relation to base year. By deducting operating expenses from the gross profit, we get operating profit. And operating profit comes to be 2,25,000, that is 3 lakhs minus 75,000. And for the year 2007, this figure comes to be 3 lakhs. Increase comes to be 75,000 and the increase is 33.3%. Next, we are given other income and interest paid. Thus, there is non-operating income. It is 30,000 in both years. No change is there. And non-operating expense, that is interest, it is there of rupees 30,000 for each year. Again, no change is there. By adding non-operating income and by deducting non-operating expenses, we shall get net profit. The figure of net profit would be the same as that of operating profit, because by the way, the items of income and expenditure are the same. Non-operating income and non-operating expenditure are the same. It is 2,25,000 and 3 lakhs for the year 2006 and 7. Increases 75,000 and percentage change is 33.3%. This is net profit before tax. Now we have to calculate tax, income tax payable. It is given in the problem that tax rate is 50% for the both years. Thus, for the first year it comes to be 1,12,500 and in second year it is 1,50,000. Increases by 37,500 and percentage change comes to be 33.3%. Now we can calculate net profit after tax. Net profit after tax. It is 1,12,500 in the first year and 1,50,000 in the subsequent year, and increase is 37,500. Percentage change comes to be 33.3%. Percentage change has been calculated as the absolute change, which is 37,500 divided by figure of the base year, that is 1,12,500. This is to be multiplied by 100. The change comes to be 33.3%. So far as analysis part is concerned, we can see that sales of the concern are increasing by 10%. Absolute change is 1,50,000. But cost of goods sold is increasing only by 5%. This has been resulted in increase in gross profit by 30%. That means firm has control over the cost of goods sold, that is direct costs, and firm has been able to gain a gross profit during the 2 years. In the first year it is 3 lakhs and in the subsequent year the gross profit is 3,90,000. So far as operating expenses are concerned, there is increase in office and administrative expenses by 60%, but selling and distribution expenses have not been changed at all. So the firm should check its office and administrative expenses. In a nutshell, total operating expenses have been increased by 20%, and the firm is gaining on part of operating profit also. Operating profit has been increased from 2,25,000 in the year 2006 to 3 lakhs in the year 2007. Thus there is increase by rupees 75,000, which comes to be 33.3%. Firm has non-operating income which is constant, and firm has non-operating expenses also, they are again constant. Non-operating income and expense are not going to change the firm's net profit. This is same as that of operating profit. Then tax revenue is there. We have paid the tax, and net profit after tax comes to be 1,12,500 and 1,50,000 for the year 2006 and 7 respectively, and there is increase in net profit by 33.3%. Thus we can safely say that profitability position of the concern is satisfactory.